Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what's in store for this week that might impact your stock and bond portfolios. I'm Scott Nasca, President of Generation Capital Management. We had a mixed market last week as the Dow Jones was down 0.3%, S&P up 0.1%, and Nasdaq was up 2.3%. We're seeing a little reversion back where growth is basically taking the lead again, something that has occurred for most of 2023, and we saw just a slight slip over the past few weeks. A little risk off the table, but we're starting to see that pour back in. Don't know if it's just a one-week phenomenon or if it's something that's going to continue through the rest of the year. Pay attention this week, going into a Labor Day week next week. So towards the end of this week, we might see a little lesser volume, people taking long weekends. So markets might be a little slower as we get towards the end of the week. In regards to the bond market, the 2-year is at 5.08%, the 30-year is at 4.23%, 85 basis point inversion. We're seeing that spread out a little bit more as, Fed Powell came out last week at his Jackson Hole Summit. It pretty much gave the indication that interest rates are going to stay higher for longer. They really want to try and tamp down this inflation that they have out there. So whereas a lot of people thought that maybe interest rates might be slowing down or actually being reduced in future quarters, he sort of threw cold water on that at this point in time, saying that rates are going to remain elevated for the time being. What happened there is shorting continued to be aggressively priced up and the longer end still stayed the same, and you see that inversion widen a little bit. As we mentioned before, inversions usually lead to economic slowdowns and recessions, so pay attention to the bond market going forward. We do have a lot of data points coming out this week. We have Q2 GDP coming out on Wednesday. We have July core PC inflation out on Thursday. Any inflation numbers come out, it's something you want to pay attention to because the Fed is looking at that and trying to get any indications to see if the economy is slowing or at least pricing pressure is coming down. We have ISM manufacturing PMI data coming out on Friday. And also on Friday is the August employment report. See if we continue to see job growth taking place in August. Important element data point that we want to pay attention to is the wage inflation or wage prices. See if they've gone up. The higher they are, the more pressure it is going to have on inflation. It's going to cause the Fed to remain pretty aggressive in their interest rate policies. If you have any questions, feel free to reach out to us, www.gencapmgmt.com. Our team is ready to answer any questions that you might have. Give your portfolios, a second opinion. Make sure that the allocations are in line with your goals and objectives and your overall risk tolerances. Be glad to take a quick look for you just to make sure you're, on the path that you need to be going forward. We also have some timely blogs on our site. John's Top Tips is always a popular one. Take a look there to see if there's any financial planning tips that you might need. Happy to help out any way we can in looking at your overall plan if you have one, and if not, help you set one up. Once again, my name is Scott Nasca, President of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.